Hi, this is Kevin Kerr for Money and Markets TV. The uncertainty and fear in the markets today can seem overwhelming. Between the debt ceiling debacle in Washington and the potential breakup of the European Union, many investors don't know where to turn. In this type of environment, gold and silver historically offer safe havens. But in this crisis, another class of precious metals is taking off as well: rare earth metals. The 17 elements in this class of commodities actually aren't that rare. They're just hard to refine. Just a few years ago, most people had never heard of rare earth metals, but we all use them every day. They're vital components in rechargeable batteries, DVDs, and fluorescent lighting, and many other environmentally friendly technologies. Before the digital revolution and the green movement, the rare earth market was very unattractive to institutional and individual investors. In the 1980s, for example, the sector was worth less than $100 million and was a money-losing venture. Anytime prices rose, manufacturers and consumers just switched to cheaper alternatives. So most countries ignored the fact that rare earth metals were in short supply, except for China. In the early 1990s, China ramped up its efforts to control the industry, and those moves have paid off. Now the country has a virtual monopoly on the rare earth market, supplying around 96% of all global demand. Over the past decade, the market for rare earths has grown at an annual rate of 8 to 11%, and that price has spiked even more in the past year or two. A big reason for that increase is the emerging middle class in Asia. They're buying electronic goods like iPads and flat screens as fast as they can. And all those products wouldn't be possible without rare earth metals. But as demand has climbed, China has been cutting supplies, reducing exports by as much as 10% a year, and that has pushed prices up rapidly. In 2009, an index holding shares of 12 rare earth miners rose by more than 600%. Then last year, China announced it was cutting exports by another 40%. Pushing prices up even further. Countries such as Japan, which rely heavily on rare earth imports to produce electronics, have been the hardest hit. So they're partnering with Mongolia to explore rare earth reserves in that country. The United States is also vulnerable to the Chinese stranglehold on the industry because it uses rare earth metals in strategic missile technology. One solution is to build a new supply chain that doesn't rely on China. But experts say that would take more than a decade and billions of dollars to achieve. In the meantime, demand is likely to keep rising and supply will stay tight, forcing rare earth prices to remain high for the foreseeable future. There are several ways to invest in this trend. You can buy individual stocks of rare earth producers, including Lynas, Molycorp, and Rare Earth Element Resources. They've had a wild ride in the last 18 months and have recently pulled back from their highs. So now may be a good time to look into adding some shares to your portfolio. If you're not comfortable with individual stocks and prefer the diversification of an exchange-traded fund, check out the Market Factors Rare Earth Strategic Metals ETF, ticker symbol REMX. This fund from Van Eck is relatively new, so I suggest caution before jumping in. The way I prefer to invest in commodities, including rare earth metals, is with ETF options. They give you the opportunity to boost your profits with limited risk, which is what subscribers in my Master Trader service are doing right now. I'm Kevin Kerr for Money and Markets TV. Thanks for watching.